Okay, students, let's start. Taxation Finance Act 2023. It is our first live revision class for September 2024, as well as the same classes orientation class for the reset batch. Actually, in taxation, what exactly we offer? We offer entire taxation within just 79 lectures, where each lecture is on average 40 to 45 minutes long. That's it. But a very good thing which we have just added in our taxation course, that is, now in this September attempt, we will give you entire taxation revision through live classes. So obviously, it's a really good opportunity for the students to join and get the pre-recorded lectures, as well as you will get the opportunity to complete the entire taxation course in live classes. And plus, there's one more thing which I'm going to announce in the next class. And whoever follows that, I would say, tip, which I'm going to introduce in the next class, to be very honest, then failure becomes near to impossible, provided that you have to follow the tip which I'm going to provide you in the next class. Okay. Finance Act 2023. So this Finance Act is actually valid for June 24. The term is gone. It is valid for September 24. The term is left. December 24 and March 25. So Finance Act 2023 is actually valid for the 4 attempts. Out of 4, obviously the 1 attempt is gone. We are left with last 3 attempts. Okay, now in Finance Act 2023, we always start our taxation syllabus from individuals. Obviously, individuals like you and me, how do they pay tax in UK? First, we need to learn that. And after that, slowly and gradually, we will be discussing capital gain tax, VAT, corporation tax, each and everything. Now, in UK, individuals pay tax according to tax year. Another name is fiscal year. In UK, tax year fiscal year starts from 6th April, for example, 2022, ends on 5th April 2023. How do we write? We write like this, 2022/23. The relevant tax year for us will start from 6th April 2023, ends on 5th April 2024. And we are going to write like this, 23/24. So individual in UK, they pay tax according to the tax year, and tax year starts from the 6th April, ends on the next 5th April. Okay, now, another thing is, in UK, only those individuals are required to pay income tax. They have earnings more than 12,570. And this amount is called personal allowance. So repeat, who pays tax in UK? Those individuals, they pay tax in UK, they have earnings more than 12,570 pound. So tax is only paid on earnings which is over and above this 12,570. For example, if someone is having an earnings of 20,000 pound, so from that 20,000, I'm going to deduct this 12,570. Whatever is left, that will be treated as a taxable income. And on that taxable income, individual will be paying tax. Okay. Now, how do we actually calculate tax for individuals? Before learning how do we calculate tax for individuals, first we need to develop the understanding relating to sources of income. Now, please, individuals can earn their income from number one, individual could be having income from non-saving income. For example, non-saving income means, for example, employment income. So an individual might be earning from the non-saving income. Non-saving means, for example, employment income. Another example is, let's say, property income, means rental income. Another example is even the pension income falls in non-saving income. Let's say sole tradership, trading profit. There's a possibility that individual is a sole trader. So the trading profit from the sole tradership, there's a possibility that individual is a partner in a partnership firm. If individual is a partner in a partnership business, then the profit which relates to that individual, obviously that is also an example of one of the examples of non-saving income. So one source of income is non-saving income. Another is trading profit from sole tradership, profit from partnership. They all fall in non-saving income. The second source of income is saving income. Saving income is very simple, simply interest income. And third is the dividend income. So when it comes to an individual, sources of income, there are three sources of income on which we have to pay income tax. One is non-saving. I've given some of the examples of non-saving income. Saving income is simply interest income, and dividend income is dividend income. So income tax is paid on incomes, and there are three major, I would say, sources of income. One is non-saving, the second is saving, and the last one is dividend income. Now, let us discuss how do we pay tax on non-saving income. Actually, individuals, they pay tax according to the bands. So when we say non-saving income, simply basic rate band, which starts from £1, ends on 37,700, and the tax rate is 20%. Higher rate band, it starts from 37,701, ends at 1,25,140. Applicable tax rate is 40%. Then additional rate, 1,25,141 plus above, no limit at all. Applicable tax rate is 45%. So these are the tax rate for the non-saving income. For example, let's say we have employment income, $60,000, and the required is income tax liability. So how do we calculate? As we have already discussed, individual is required to pay income tax, but only on the income which is over and above the personal allowance. And employment income is a non-saving income. Employment income is a non-saving income. Employment income is 60,000. Personal allowance is 12,570. Here comes your taxable income. Let me use the calculator. 60,000 minus 12,570. I'm getting 47,430. How do we apply tax rates now? First, we have to utilize the basic rate band. After utilizing the basic rate band, then higher rate band starts. Income tax, basic rate band, non-saving income, 37,700 into 20%. So 37,700 into 20%, that is 7,540. Now, the taxable income is actually 47,430. Out of this 47,430, we have tax 37,700. So how much is left? 47,430 minus 37,700. How much is left? 47,430 minus 37,700. We are left with 9,730. Logically, this 9,730 falls in high rate band. Obviously, non-saving income. 9,730. Applicable tax rate is 40%. So 9,730 into 40%, I'm getting 3,892. If I add 37,700 plus 9,730, I'll get 47,430. And here comes your income tax liability. $7,540. Income tax liability is 11,432. Income tax liability is 11,432. Okay, now let's see one more example. Assuming we have employment income, 80,000. We also have pay. Pay means pay as you earn. Let's say the pay is assuming 7,000 pounds. Actually, this is the tax which is already paid. Pay as you earn. So 7,000 is the tax which is already paid. And we are working for Mr. X. Required. Number one, income tax liability. And the second is tax payable. Number one requirement is income tax liability, and the second is tax payable. We'll see the difference. Then what is the difference between income tax liability and tax payable? But never forget pay. Pay means pay as you earn. So 7,000 is already paid as tax. We know that employment income is a non-saving income. Employment income is 80,000. Let's deduct the personal allowance. 12,570. Here comes the taxable income. So 80,000 minus 12,570. I'm getting taxable income 67,430. Let's calculate income tax. First 37,700 you cannot directly apply 40%. First, you have to utilize the basic rate band. After that, you will go for higher rate band. And after utilizing the higher rate band, then you can go for additional rate band. It is 7540, if I'm not wrong. Okay, now. From this 67,430, if I deduct 37,700, which is the basic rate band, how much falls in high rate band? Let's see. 29,730. Let me recheck. 67,430 minus 37,700. I'm getting 29,730. This 29,730 falls in high rate band, where applicable tax rate is 40%. So 11,892. If I add both of them, so I'll get 67,430. Let's see, income tax liability. Income tax liability is 19,432. This is income tax liability. Okay. Even though the income tax liability is 19,432, but this individual has already paid tax as pay 7,000. So less pay as you earn, which is 7. Here comes now tax payable. Tax payable means still this individual will have to pay 12,432. Still this individual will have to pay 12,432. Now there's one question. The question is, sir, what if, assuming, okay, it is not happening in this question. Okay, let's make it part B. Part B of the same question. Assuming, I'm assuming, what if pay was 20,000 pound instead of 7? See, there's one possibility that there's no pay, which we have done in our example number 1. Second, pay is 7,000, which is less than income tax liability. There's third possibility, if pay could be more than the income tax liability, then what happens? Let's see. Assuming everything is same in part B, only one difference. The difference is payee is not 7,000, now it is 20,000. Now look at this. Income tax liability is 19,432. Let's deduct pay as you earn, which is 20,000. Logically, the income tax liability is lower than the tax which is already paid in advance. So 19,432 minus 20,000. I got 562. Logically, this 562 is not tax payable. It is tax refundable. This is which Mr. X has paid. Actually, Mr. X has paid in advance more tax than income tax liability. So whenever number 1 finding, income tax liability is more than paid, then you will have tax payable. If income tax liability is less than paid, then you will have tax refundable. Okay. The second source of income is saving income. The second source of income is saving income. Saving income simply means interest income. Saving income simply means interest income. Basic rate band, we know that it starts from £1, goes till 37,700. Please always remember, you will study this in corporation tax. In self-assessment, we will discuss this. If you are paying more tax, the good thing is HMRC is going to refund you, and normally they refund with the interest. They will give you interest as well. And if you are paying late tax, then obviously you have to pay the tax. Along with the tax, you have to pay interest as well. So these things we will discuss in self-assessment. Saving income. Saving income, basic rate band, the tax rate is again 20%. Higher rate band, 37,701 goes till 1,25,140. Applicable tax rate is 40%. Additional rate, 1,25,141 plus above, the rate is 45. But in saving income, there are a few additional rules as well. Only in saving income. In saving income, there is one concept of starting rate band. That is from £1 till 5,000, where applicable tax rate is 0%. When this starting rate band comes into action, we will discuss that. So there are three additional rules in saving income. One is starting rate band. When do we use this starting rate band? Wait for that. Second point is, if individual is a basic rate taxpayer, then individual gets nil rate band of £1,000, where applicable tax rate is 0%. Third, there's a possibility that individual is a higher rate taxpayer. If an individual is a higher rate taxpayer, then nil rate band is £500. Fourth, if an individual is an additional rate taxpayer, then on saving income, no nil rate band. So if someone is an additional rate taxpayer, will not be getting any nil rate band on his or her saving income. Okay. Let's see the third one also. Then we'll discuss each and everything together. The third source of income. Student, the third source of income is the dividend income. Third source of income is the dividend income. In case of dividend income, can I say in case of dividend income, every individual irrespective of individual's tax paying status. Actually, every individual will get the nil rate band of £1,000. But let us first deal with this saving, then I'm going to discuss that dividend as well. For example, Mr. X employment income is, let's say, 60,000. Assuming the saving income is 20,000 required. Income, tax liability. The required is just calculate income, tax liability. Okay. Now, actually, we don't have one source of income. We have two sources of income. One is non-saving, another is saving. Always remember one thing. We always first tax non-saving source of income. Then we move on to the saving income. And finally, we go towards dividend income. Non-saving income. The second column is saving income. And the last is total. Employment income, we know that is non-saving income. Let's to save the time simply. Employment income is 60,000. Just to save the time, I'm doing this. Saving income is 20. So the total is 80. Now, personal allowance. Always remember the sequence of utilizing the personal allowance. First, we utilize the personal allowance against. First, we utilize the personal allowance against the non-saving income. After that, we utilize the if you don't have the non-saving income or you have very less non-saving income, let's say, still personal allowance is left. If this is the case, then we utilize the personal allowance against the saving income. And if still personal allowance is left, then we utilize the personal allowance against the dividend income. So the normal sequence of utilizing the personal allowance is, first, we utilize the personal allowance against the non-saving income, then saving, and finally, we go towards dividend income. Right now, obviously, we have really big amount of non-saving income. So personal allowance is 12,570. Here comes the taxable income. Calculator. 60,000 minus 12,570. I'm getting 47,430. 20,000. 67,430. Now let's calculate income tax. Never forget the sequence of calculating income tax. First, we apply the tax rate on non-saving income. Second, we go on saving income. And finally, we apply tax rate on dividend income, which we have not discussed. We will discuss, don't worry at all. And first, you have to utilize the basic rate band, after that, high rate band. Logically, basic rate band and non-saving income, 37,700 into 20%. 7,540. From 47,430, I'll deduct 37,700. Let's see how much is left for how much falls in high rate band? 47,430 minus 37,700. I'm getting 9730. High rate band, obviously non-saving income. Applicable rate is 40%. So 9730 into 40%. I'm getting 3892. So we have applied tax rates on non-saving income. Now we have to move towards saving income. Now please try to understand. Before applying any tax rate on saving income, let us first check. Are we getting any starting rate band? Yes or no? Look at this. Listen nicely, please. Non-saving income, after deducting the personal allowance from the non-saving income, if your taxable income in the column of non-saving income, if your taxable income is either 5,000 or more than that, in that case, you will not be getting any starting rate band. Repeat. If in the column of non-saving, after deducting personal allowance, your final answer is either it is 5,000 or more than that, you will not be getting any starting rate band for the saving income. So you can see here, this individual will not be getting any starting rate band. Why? Because logically that is already utilized. That is already consumed by the non-saving income. So whenever in the column of non-saving income, taxable income is either 5,000 or more, starting rate band will not come into action. Now, second, now let's think for the nil rate band. Actually, individual will get nil rate band 1,000 pound or 500 pound. It depends on the individual's tax paying status. If individual is a basic rate taxpayer, then individual will get a nil rate band of 1,000 pound. But if individual is a higher rate taxpayer, then individual will get 500 pound for the nil rate band. If an individual is an additional rate taxpayer, then individual will not be getting any nil rate band. The question is, how do we decide the individual's tax paying status? Please look at this. Look at this. The circle which I am making, if it does not look like circle, please take it as a circle. Consider this as a circle. Look at this, 67,430. Check in the column of the total taxable income. If the total taxable income is more than 37,700 and less than 1,25,140, then this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band of 500. Repeat. If in the column of total, your total taxable income is more than 37,700 and less than 1,25,140, then that individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band of 500. And in this question, this individual gets nil rate band of 500. Nil rate band, saving income, only 500. Because this individual is a higher rate taxpayer. So out of this 20,000, 500 actually falls in nil rate band, and the remaining 19,500 actually falls in high rate band, because basic rate band is already utilized. But high rate band, there's too much space is left in high rate band. So out of 20,000, 500 actually falls in nil rate band. So the remaining 19,500, remaining 19,500 actually falls in high rate band, because basic rate band is already utilized. High rate band, this time saving income, 19,500. Applicable tax rate is 40%. 19,500 into 40%. I'm getting 7,800. Obviously, if you add all of them, you will get the taxable income 67,430. Let's see the income tax liability. 7,800 plus 3,892 plus 7,540. I'm getting 19,232. This is my income tax liability. This is my income tax liability, which is 19,232. Now, please look at this. If taxable income, let me make it a little bit clear. Just one thing. Non-saving income and starting rate band for saving income. Please look at this. If taxable income in the column of non-saving, if it is more than equal to 5,000 pound, if taxable income in the column of non-saving, taxable income means after deducting the personal allowance. So in the column of non-saving income after deducting the personal allowance, your answer is either 5,000 pound or more. In that case, there will be no starting rate band for the saving income. Second, let's assume taxable income after deducting the personal allowance in the column of non-saving, it is 2,000. If it is 2,000, then for the saving income, you will get a starting rate band of 3,000. Third possibility, just for assuming taxable income in the column of non-saving income after deducting the personal allowance, if it is 1,000, then you will get a starting rate, you are going to get the starting rate band for the saving income 4,000 pound. Finally, if taxable income, assuming after deducting the personal allowance in the column of non-saving income, if it is 0, then you will get a starting rate band of entire 5,000 for the saving income. For example, Mr. Y, assuming employment income is, I'm just assuming, employment income is, let's say, 15,000. And saving income is the interest income, let's say it is 20,000. Required income tax liability. I really want every one of you to attempt this question and give me answer, please. Employment income is 15,000, saving income is 20. I need you to calculate income tax liability. Please try whatever you think it is correct. Students, any answer? Non-saving income? Saving income? Total. Okay. Please go. Okay, get well soon. Non-saving income is 15,000. Saving income is 20. Total is 35. First, we deduct the personal allowance from the non-saving income. Personal allowance is 12,570. Let's see the taxable income. So 15,000 minus 12,570. Taxable income is 2,430. Please look at this. The taxable income is less than 5,000. Keep that in your mind. So I'm getting 22,430. Let's calculate income tax. Income tax. Obviously, first we have to apply income tax on non-saving income. Basic rate band non-saving is just 2430. Applicable tax rate is 20%. So 2430 into 20%, I'm getting 486. Now, please, student, try to understand. In the column of non-saving, taxable income is 2430. This is the case. If taxable income is, for example, 2,000, then a starting rate band is 3,000. Now, taxable income is 2430. If taxable income in the column of non-saving is 2430, then how much starting rate band is available? From 5,000, we need to deduct 2430. From 5,000, if I deduct 2430, I'm getting 2570. So starting rate band is now available. Why starting rate band is now available? Because taxable income in the column of non-saving, it is less than 5,000 pound. How much starting rate band is available? 2570 for the saving income. Starting rate band saving income 2570. Applicable tax rate is 0%. Let's see. Applicable tax rate is 0%. Is 0. Now you have to check for the nil rate band. Look at this 22,430. Can I say 22,000 by looking at the column of total taxable income, which is 22,430. This 22,430 is less than the basic rate band. It is not exceeding the basic rate band. Since the total taxable income is not exceeding 37,700, so this individual is a basic rate taxpayer. Can I say whoever is a basic rate taxpayer gets nil rate band 1,000 pound for the saving income? So nil rate band saving income 1,000 pound. So saving income is 20. Out of this 20, 2570 we have taken in starting rate band, 1,000 we have taken in nil rate band. How much is still left? 20,000 minus 2570 minus 1,000. I'm getting 16,430. Obviously, this falls in basic rate band. Saving income 16,430, where applicable tax rate is 20%. So I'm getting 3,286. Just something went wrong. The light is gone. I don't know what happened to this. So let me just add the total of income tax liability. Income tax liability 486 plus 3,286. I'm getting 3,772. This is income tax liability. Okay, students, in today's class, we have covered two things. how do we calculate tax for in case of non-saving income and saving income? I'm going to conduct the second class is going to be tomorrow, in which we'll be discussing the dividend income, as well as we will be discussing when this personal allowance will reduce. Plus, we'll be discussing a few more things regarding pension as well. What will be the timings for the tomorrow class? It will be mentioned in your relevant groups. So thank you very much. And today's class will be uploaded, I think, within next 1 or 2 hours. This class will be uploaded on the portal as well as obviously on YouTube as well. Those they are watching this lecture on YouTube and they want to enroll themselves at ASA. So let me give you ASA admin number. If someone is outside Pakistan, then it is 0092 333 666 Those students they are within Pakistan 0333 666 You can contact ASA admin for more information. So thank you very much for attending today's class. Tomorrow's class timings will be shared in your relevant WhatsApp group. Thanks a lot. Have a nice day.